Welcome to the Schar School Power Lunch. This week, it's a roundtable on economic policy. The coronavirus pandemic has brought the world market to its knees, deepening inequalities and exposing the limits of government action and ingenuity. On the other hand, the pandemic has also expedited technological transformations in ways that promise new sources of growth on an otherwise bleak horizon. What is the place of policy in this landscape? How can America get back to work? The Power Lunch welcomes Annie Lowrey, economic policy reporter for The Atlantic and the author of the book, Give People Money: How a Universal Basic Income Would End Poverty, Revolutionize Work, and Remake the World. Steven Pearlstein, columnist for The Washington Post and the author of the book, Moral Capitalism: Why Fairness Won't Make Us Poor. And Betsy Stevenson, professor of public policy and economics at the University of Michigan and a former member of the White House's Council of Economic Advisors. Well, COVID-19 has curtailed the reach of globalization. It has accelerated our shift to digital, and it has intensified global and economic inequality within countries and, of course, across them. Hi, I'm Justin Guest, an associate professor here at the Schar School of Policy and Government. Welcome to today's Power Lunch. I'm delighted to be joined by Annie Lowrey, Steve Pearlstein, and Betsy Stevenson. Thank you all for joining us. As President-elect Joe Biden prepares to take office, many are arguing that the United States is facing what's been called a K-shaped recovery. Those who are already well off are seeing their job markets reopen and remote work continue, while the working class are seeing stagnation due to continuing slumps in the service sector. Annie Lowrey, let's start with you. What does it mean for our collective economic future when the country is experiencing these radically different economic and financial realities?
It's a good question. It means a lot of different things. One important thing that I think it means is that the headline economic figures right now, which have been improving, even if they're at a pretty bad level, are sort of underplaying the pain that a lot of families are feeling. Over the summer, after Congress passed the CARES Act, there was a very big unemployment insurance expansion, the $600 a week top up, these $1,200 checks that went out to people. And that prevented a lot of lower income people who had lost work from feeling a lot of economic pain. But that stimulus has kind of expired, which is part of the reason that I think we're seeing the economy slow down quite a bit right now. So I think that's one thing. The second is that this was a very big, unusual recession that we're recovering from. And I think that we risk, especially in the next 6 months to a year when we'll have the vaccine deployed, leaving a lot of people on the sidelines if we don't get more stimulus now and just kind of allow the economy to recover slowly, especially given that the coronavirus itself is spreading more rapidly now than it ever has been in the United States. And so we're entering this kind of holiday time public health disaster that I think is really going to start, and we can already see it start suppressing economic activity, when normally during the holidays you get all of this holiday spending, holiday travel, and I think that people will be a little bit too afraid to do that. And might not be able to participate in a reopening of the economy, a full reopening of the economy, if they're really economically stressed 6 months or a year from now.
Thanks, Annie. And politically, what are you seeing in your reporting in terms of how it's changing the politics of the situation, in terms of what people's demands are on our public officials when they are experiencing these economic realities so differently?
Yeah, we have this really funny post-election tipping point where we don't know the composition of the Senate yet. It could be a Democratic-controlled Senate that ends up ending the filibuster, and that's going to look radically different than having a Senate that is controlled by Republicans who will block a lot of legislation or demand major changes to it. I think that there's a lot of fear that this could look like the last 6 years of the Obama administration, in which it's really be really, really hard to get anything done. And Democrats are kind of put in the position of, using certain types of bills or executive action and not having the ability to pass big legislation. And it's just a really big question mark. It's quite unusual also to have the upper chamber just pending, and we won't know until those two races in Georgia in January.
Thanks so much. Betsy Stevenson, you are one of the country's top labor economists. What is the state of the labor market right now?
Well, as Amy mentioned, we're already seeing a slowdown in the labor market. I think it's really important for people to realize that what's happening in the economy, what's happening in the labor market is really driven by the virus, not by the different actions that state governors are taking to control the virus or not control the virus. So we just saw yesterday claims for new people applying for unemployment insurance. So what we call initial claims for unemployment insurance increased yesterday. The levels were already high. They were already week after week. We're seeing people applying for unemployment insurance that looks like what we were seeing in the 2008 recession. Those numbers started going up in the report we got yesterday for last week. And the thing that really struck me was the really large increase in North Dakota. North Dakota's increase was driven by the damage the virus is doing in North Dakota, not by actions the governor's taken to shut a bunch of things down. And so that's just one example of how to see that. There's also research that has shown that what leads people to stay home, to not go to restaurants, as Annie said, to not do the stuff we normally see people doing around the holiday season, is that they're trying to protect themselves. Now, unfortunately, not everybody's taking those actions. And I think the real concern is that next week, we have the biggest travel day of the year. In fact, that's what, traditionally the media calls it travel day on Wednesday, on Sunday, on Thursday as we go for Thanksgiving. But if we put all those people together and expose them all on the same day, I think that, we could see a really large amount of damage done, not just to people's health, but also to the economy in 2 or 3 weeks' time as we start to see the disease rate rise very rapidly. I think the one thing I should say, you asked specifically about the labor market, is the labor market has been hit disproportionately at the bottom. And that's because low wage workers are in jobs that they can't do from home. And high wage workers are in jobs that they can do from home. And that's, you talk about the K-shaped recovery. It was also a problem just from the very beginning of the shutdown. We saw low wage workers got hammered early on. They're the ones who lost their jobs or stayed on the job and got exposed to the virus and had a much more hazardous job. So they got sort of it on both ends. If they kept their job, it was in riskier conditions than they had initially signed up for. And if they didn't keep their job, they didn't have income coming in. Annie mentioned the fact that we had unemployment insurance helping those folks out a lot with supplemental payments. We still have the unemployment insurance, even though we don't have the supplemental payments. That runs out at the end of this year. And so I do think right now, you can look at the data, there are over 20 million people depending on unemployment insurance payments right now.
And in terms of the horizon, you're not seeing any of these trends letting up anytime soon, and if possible, and if likely, perhaps even worsening. Yeah.
Well, I think the one good thing is I think many people didn't expect, many forecasters, myself included, for so many people to be recalled to their jobs when they were temporarily laid off. So it turns out, employers who are temporarily laying people off, they want to be able to bring them back. They want to stay in business. And if policymakers do things that help them stay in business, they're going to bring their workers back. We saw that happen at a much greater rate than I think anyone anticipated. I think we're about to see another wave of temporary layoffs, and we just have to hope that we do the things to support those businesses and help them bring those workers back. But I do think, obviously, things have gotten better, but I think we're on the cusp of them getting worse for several weeks or several months, and then it's an open question of what we do to help with that. But these temporary layoffs do operate very differently from what we see in a traditional recession. In a traditional recession, you're talking permanent job loss, and it takes a really a long time to get those people into new jobs. Right now, we're talking about businesses that are doing everything they can to stay afloat. And when they can reopen, they want to bring those workers back.
Steve Pearlstein, you won a Pulitzer Prize in 2008 writing about the last recession, which many people didn't think was a traditional recession either, of course. And of course, it was in many ways a very different challenge from the one that we're seeing right now. In the recovery ahead of us, what lessons can we take away from the last recession from 2008 and the previous crisis, and what lessons simply don't apply?
Well, it's a good question, actually. This is very different. That was a recession that was engendered by the bursting of a big financial bubble, a big credit bubble, which hit housing but hit other sectors as well, and that takes a long time to get out of. This one shouldn't take so long. As Betsy says, the job losses aren't necessarily as permanent, but if we handle it correctly, the damage to the business institutions, the businesses and the financial institutions won't be as severe. And if you lose your financial system, it's really hard to get a good recovery going because capital doesn't flow, people don't make investments, and people are rebuilding their household balance sheets. They're getting rid of their debt and paying down their debt rather than spending. So we may not have that this time, and so it may go quicker. I say, though, this is the kind of recession, and Betsy may disagree with me, that not as amenable to just have the government spend money any way it wants, and that'll float everything up. I think you want to, in this kind of a recession, you really want to target on the people whose income has really been impaired, so that they can continue spending, because there's a lot of the rest of us who are spending fine. In fact, we have our income and we don't have much else to spend it on. So you really want to focus, I think, on the people whose income has been impaired. But the second thing you need to focus on is, as Betsy suggested, to keep those businesses as viable as long as possible. And there has been a couple of things here that there are a couple of shoes to drop here. I said that the last one was a financial driven one. We haven't seen big financial impacts, but we haven't seen it yet. There's a lot of people who are not paying their debts. There's a lot of people who are not paying their leases to people who have debts. And at some point, there's going to be a reckoning. We've been pretty good about offering forbearance. Lenders have been pretty good at offering forbearance. Landlords have been good at offering forbearance. But at some point, they're going to need to get the money because they have debts to pay themselves. And that's going to start a set of dominoes. I think we've held off corporate bankruptcies and business bankruptcies for a while, and real estate bankruptcies, although not all, retail bankruptcies, although not all. We're going to see a lot more of that. And in that case, you may see stuff that is more like what we saw in 2008, which is a sort of prolonged wet blanket on the financial system that will have a macroeconomic impact.
Betsy, do you want to come in on that?
Yeah. So let's start with the idea of so first of all, I completely agree that we cannot have normal fiscal stimulus work, because one of the things we saw was people at the very top end of the income distribution are saving more than they normally save. And so shoveling money at them to put in their savings account is not going to help. What we need to be doing is getting money to people who are going to spend it. The thing that I worry most about is people being able to pay their rent and pay their mortgage when we get to the end of these forbearances at the end of the year. Banks should have, lending institutions should be hopefully negotiating with people and, trying to work something out. But I think that's where the risk is, people who run out of money, right? And so we have to think about, I definitely agree with the idea that we have to think about getting money to the people who need it most. But at the same time, People have tried to say, I think in the first stimulus, this isn't about traditional stimulus. This is just about, helping the people who are feeling the most pain. In some sense, it's still, though, about traditional stimulus, right? If you've got people who aren't paying their rent, who aren't able to buy food, who aren't able to spend, then that ricochets through the economy. But it's not like a normal economy in the sense that there are limited options of where you can spend your money. And that means that we have to target people better because we have to make sure we're giving money to people who are going to spend it in those limited places, right? We can't give it to people to go out to restaurants. And that's true now. That was true back in March. And I think that, I think that it does limit what needs to happen. But the most important spending is getting it to, lower income people who need it, people who've lost their jobs, but also the state and local governments, because we're already seeing the state and local government layoffs coming. I've been describing this whole this whole recession as a she-cession. It's hitting women extra hard, and it's hit them with a 1, 2, 3 punch. The first was that they are more likely to do in-person jobs than men. So we saw them lose their jobs. The second is these state and local layoffs. We've already seen women continuing to lose jobs through state and local layoffs, and that's going to continue through next year. And the third is childcare. And that childcare is, ironically, it's on both sides. These are childcare jobs that have gone away, that are held by women, that are keeping women from doing other jobs because they can't safely put their kids in childcare, or they don't have schools to send them to. And we haven't been able to adapt the childcare centers, our childcare system, well enough to allow a mom who needs to work to be able to safely send their kid to do virtual schooling in a supervised setting with somebody who's employed to safely watch after them. And so I think that's the situation we're going into. And, again, I'll say we are right where we were last spring, which is the virus is going to dictate what happens. And frankly, every single person's choice next week is going to dictate what happens to our economy over, the next month, because, a massive hit of illness all happening within a 3-week period, a 1 to 3 week period, is going to overwhelm our hospitals. And I don't know about you, but I'm not leaving the house even to drive down the street, because what if you got in a car accident and there's no hospital care? So if that happens, it's going to shut us all down, because we're going to be terrified if there's literally no hospitals that can take us.
I want to pick up on a theme that's come through both your comments, Betsy, and also Steve's about rent and mortgage payments. Annie, you made the argument back in May for massive rent relief because of the economic crisis. With the lapse of the increase in unemployment insurance, many Americans have basically been left out in the cold. What can we do now to help start getting them back on their feet beyond what we've heard from Steve and Betsy here?
Yeah, so I think that there's a lot of ways to help address this particular form of stress. And the kind of rent relief that people were talking about, where there would just be rent forbearance and people wouldn't be evicted, but you basically move the loss, the renter doesn't pay, and then the person who owns their property is missing that income, right? Like, everybody's rent is somebody else's income. And those aren't all big corporations with access to the global financial markets. It's very often middle income people who own a property who rent it out. And so you don't want them to be put in a tough financial position, right? You're passing around a lot of pain if you do that. And so how do you actually deal with that? One thing that I actually think ties through all three of our comments here is that we have had a complete abdication of federal response on the public health front, and frankly on the economic front also, right? We know that we need state and local aid. We know that we need more stimulus. We know that we need a national public health plan to start getting this under control, and we haven't had that. So we really haven't had a government that has tried to rationalize these problems that are unusual, but nevertheless that we've had for months. And so in terms of rent relief, Things like UI payments are really helpful for that, because if you're getting money from UI with that $600 a week bonus, you're capable of paying your bills. And we saw that people who received that money did actually pay their bills with it. They saved some of it, but they paid their landlord. They weren't getting evicted. They weren't getting hoarded. So that's one way to do it. And you wouldn't need some brand new kind of technically difficult rent relief package, though there have been many of those proposed. But I do think that there are a number of policy problems here that the federal government is just not trying to tackle. So the child care crisis is another one. You could think that a creative government could sort of think of ways to help either keep the schools open or facilitate some kind of safe distance learning. But it's been up to states and cities, which very, very often have to keep their budgets balanced. They've seen large declines in sales taxes and other forms of revenue. And so they don't have the capacity that the federal government has. And I think it's been interesting watching the US versus other countries, just in terms of how much policy creativity and how much of that kind of like strong top-down response we've been able to get. One thing that I do think is interesting is that the US this year will actually do pretty well in GDP terms compared to some of its peer countries. So we've had a smaller decline in GDP than, say, a Germany or a UK or France. But we've also had a much bigger increase in unemployment because those governments, in some cases, chose to pay businesses to keep workers on their payroll. And so it's like a little bit there's a little bit of tension there between those two things. And I don't know that it's possible to say which path was better. But certainly on the public health front, we have really done a lot worse than a lot of our peer countries.
Well, I think that tension between a more socialized approach is one of the things that was on the ballot in the past election. Steve, Bernie Sanders attracted serious energy as a candidate in the primaries, talking about a massive government stimulus of the economy and aggressive economic regulation. And of course, he ultimately didn't win the nomination. Biden won the presidency, which with a much more moderate economic approach. And Democrats in the House may have even been somewhat penalized for their association with many of Sanders' ideas. I think that's up for debate. Let's just start, though, with the idea of the stimulus here. What, in your mind, Steve, is needed from the stimulus perspective? What is essential, bare minimum, to stop the spiral? And what do you think is actually ideal? What's optimal?
Well, the first thing is to extend unemployment, the unemployment insurance things, which is both the federal bonus. If it's not $600, $500, $400, something like that. But also, the other important thing that was done was that unemployment insurance was extended to lots of workers who don't qualify normally for unemployment insurance. Gig workers are just, part-time workers are just some of them. But actually, more than half of all workers in the United States, I believe, Betsy, you can correct me on that, are not actually eligible for unemployment insurance. The stimulus bill in last spring extended it, and that's really important to extend. I don't think we have to send $1,200 checks to every household. I'm a little bit of an outlier on this. I think the federal government can help with state and local governments, and the argument is made by Democrats, state and local governments can't do deficit financing. Yes, but they can raise their taxes. And they can raise their taxes, their capital gains taxes and their income taxes on rich people. The state of New Jersey has done so. And the idea that states are somehow helpless to raise money is false. This is a K-shaped recession. There are people whose income has not been affected, and they can afford to pay higher, especially coming after 2 decades in which state governments have been cutting their tax rates almost without abatement. So I think some combination of that, and the federal government might want to make some of its of money available contingent on states raising their own money. I would also focus on, I think you don't want to mistake this problem again of rent relief and tenant relief. This is some commercial tenant relief. The idea that the government is going to write checks for that, sometimes that may work. That we had the PPP program. I don't think we're going to get into the European model of, the government will guarantee payroll for all companies. But there's a lot you can do through the regulatory bank and financial regulatory process to not only enable but encourage lenders, and that's not just banks. There's other kinds of lenders through the shadow banking system to make it possible for them to extend this forbearance. So it isn't that that if you haven't been able to pay, you will never have to pay that again. It's that we will extend the term of the loan, and you can pay back what you didn't pay very slowly over the next 10 years or 20 years or whatever, in the case of a commercial lease, or just put these things on the back end so that people can pay back slowly. And that requires some changes in bank and financial regulation, and we should have been already working on that, frankly, because this is going to be a big deal. At some point, there's going to be a reckoning on all this debt that hasn't been paid. Student loan debt is another that you might want to do with just a cash grant, but some of this other stuff gets pretty complicated.
Betsy, what would be your essentials for a stimulus and your ideal?
Well, look, I wanted to actually go back to something
Sure.
that Annie had mentioned, and then Steve mentioned it again, which is this idea of lots of European countries pay employers to keep people on the books. We did a little bit of that through PPP, but we primarily just supported people through their temporary layoffs through unemployment insurance. And I said earlier, but without the clarity that Steven said, which is we gave more people unemployment insurance than we've ever given before. So I said there's around 20 million people getting it today. That reflects about 13 million more people getting it than would have qualified before the expansion and extensions that were included in the CARES Act. So we blew up our unemployment insurance system so many more people would qualify. And we did that a lot more than relying on just businesses continuing to pay people. There was a lot of concern about that in the sense of, would that mean that people would be less sticky to go back to their job? And I think what we learned is there really isn't a big difference between that European method and the US method. The US method involves people being on temporary layoff, getting payments from the government, and being recalled back to their employer. We saw those temporary layoffs go down, and it's not clear to me at the end of the day that, when it comes to, say, next March, that we're going to see massive differences in the United States between who's able to go back to their old employer and in some of the European countries that tried a different approach. So, it's a little bit of semantics, that way we measure unemployment, but I think we did manage to support workers who were waiting to go back to their old job. And we managed to do it without asking employers to front the costs for us, which is essentially what we're doing when we ask employers to keep you on the books. So with the PPP loans, we said, sure, you guys should keep them on payroll, and then we'll give you this loan. We also did that through the requirement that companies with fewer than 500 employees provide paid sick and paid family leave. So if you have a kid at home, you get to take 12 weeks off, and the government's going to pay most of your salary to your employer, and as long as your employer pays it to you. Well, we've not seen a lot of employers claim those credits so far. I suspect they'll come in and eventually they'll get their money back. But what you are essentially doing is asking employers to lay cash down on the table first, and then the government reimburses the employer. So we just have to think about that a little bit, like who's most liquid, who's got the cash right now if we need it right now. Now, you asked like what's on the top of my agenda for stimulus. Keeping access to unemployment insurance has got to be at the very top of my agenda. And I really hope when we come out of all of this, we have a good long debate and discussion about how many workers should be covered and supported by unemployment insurance. It's actually fewer than half in normal times. It's more like a quarter. And that's because it's not just gig workers. It's if you're self-employed in any way, if you're an independent contractor in any way, you're a journalist who works very hard, but you're not working for one particular outlet on salary, but you're paid per piece. If if you work part-time and you're a low-wage worker, you might not have sufficient earnings. That drives me crazy. I have had people work for me in my home where I've paid the taxes for them. I've paid the unemployment insurance taxes for them, but because they work only 3 or 4 hours a week, they're not eligible. We paid into the system, but they're not eligible. So with the expansion of the CARES Act, it made a lot more people eligible, both based on that, how much they worked, how little they earned. We expanded the net. And I think that unemployment insurance, it's had its problems, but it's a darn good system. And so that's my first priority.
Thanks, Betsy. Let me just take a moment to remind our viewers that you can ask questions anytime using the chat box. And we tend to get to the majority of the questions asked, so please do put your questions in there and we'll get to them towards the top of the hour. Steve, let me return to you for a second. Do you interpret the unexpected strength of Trumpism and many down-ballot Republicans as a rebuke of Keynesianism or as what President Trump has called it, socialism? Do you think this affects the politics of the economic recovery hereafter?
Well, I would be thrilled if most of the public knew who Keynes was, but I suspect not. But I think the socialism thing was a bit of it. I see it more as that voters in the last 3 weeks of the election could very well sense the enthusiasm in the Democratic Party for what they expected would be a sweep, White House, House, and Senate, and all the things they were going to do that they couldn't have otherwise done. And that got to scaring them. Different people conjured up different swing voters conjured up different things that they were afraid of. But I would say, yes, that at the end of the day, to some degree, people returned home to their tribes where they might have maybe voted Democratic down ballot. They returned to the tribe because they wanted to vote for Joe Biden for president, but they didn't want to give the Democrats let them sweep the table and do the kinds of things that perhaps that scared them, and some of that was economic.
Thanks, Steve. Yeah, Annie, in 2018, as I mentioned in the opening, you wrote Give People Money, where you argued a case for a relatively socialist idea, a universal basic income. And people argue for UBI, as it's called, for a range of reasons, such as the idea that cash is the ideal and optimal mechanism to redistribute money, or that automation and artificial intelligence will create a lot of unemployment, and we need some kind of wider social safety net. To you, what is the best argument, but also what are the challenges that it faces in light of the backlash that Steve just talked about?
Yeah, I mean, UBI is not going to happen in the United States at all. And I'm not even sure that it's actually the best use of money. I do think that there's a lot of power in providing aid unconditionally, in having it provided automatically, of providing aid in cash. And so you can take a look at a policy like TANF, which is our cash welfare program in the United States, which is deeply paternalistic, very ineffective at moving people out of poverty. People hate it. It's a really awful program to participate in many cases. There's all these invasive questions that you get asked. You have to comply with these really onerous work requirements. And so people don't use it because it's so heavily stigmatized. So if you replaced that program with something more like a child grant, even a means-tested child grant, so that you're not giving it to people who are making $400,000 a year, I think that there's a lot of power in that. One thing that I think that you can see is that policies work really well in the United States when they're kind of clear. Often when they're federally administered as opposed to administered by the states. So like Social Security, for instance, is a really well-run program that people really like. And so I feel like there's more the lesson of UBI that can be applied to all sorts of policies than the impulse to actually have a UBI itself in the United States. Because we have kind of UBI-like policies, and again, they tend to work really well. So Social Security is probably the most UBI-like thing other than the Alaska Permanent Fund dividend that we have in American policy. And I feel like, again, there's just a lot of lessons from that. I'll also note that just giving people cash, the $1,200 checks, and especially the UI top up, worked really well to support the economy in this case. And again, if we could take this sort of lesson from that and apply it more broadly, so when the unemployment rate hits a certain percentage point, all of a sudden a UI top up starts going out to help stimulate the economy, that kind of thing. I think that there could be a lot of power in that. And, I think that there's interesting questions about whether the labor market might change in ways that you're going to require something like a UBI in the future. I think that's quite unlikely, and it's certainly not here. But it's that kind of techno-futurist argument, I think, often gets applied to an economy that doesn't really look that way right now. But yeah, I wish that there were more emphasis on taking kind of kludgy, difficult to use, not super effective programs and making them more UBI-like. So even something like making it so that you can use food stamps on a broader range of things, because it's often really delimited. One of my favorite examples of this is that depending on the state that you're in, sometimes you can only buy American-produced cheese with food stamps. So if your cheese happened to be imported from Mexico or Canada, like, you cannot buy it. There's one example where there was some sweet potato and white potato distinction, and that kind of stuff is just ridiculous. That kind of gross simplification is something that I think has been kind of neglected by policymakers. This sort of just like making government work better, making these things easier to use. I think there's actually sort of some low-hanging fruit there.
Yeah, I want to.
So I actually wanted to jump in just because I had a libertarian scholar recently convince me that I should think harder about UBI, and you laid out UBI as socialist. And Annie, I totally agree with you that's not happening anytime, but I'm going to give you the libertarian argument that she gave me, which this is Miranda Perry Fleischer. And, her view is, first of all, it's not like unconditional and everybody's going to get the money. It's just that we're going to give the money first and ask questions later, because obviously people are still going to pay taxes at the end. And so if you're making $400,000 a year, you're probably the person who's contributing to the UBI. And so we're clawing all the UBI back away from you. Probably true for somebody making $100,000 a year. But what we're not doing is asking you to tell us about last year's income, show us evidence of where you're at before we qualify you for the program. And that makes it just way easier to administer. It makes it less invasive in people's lives. And it also makes it more responsive. And so I thought, when I started thinking about it that way, it seems like a very, different kind of policy. And then it also takes us away from the thing that, libertarians and conservatives really hate, which is like telling people you can have money for this, but not that. Right. So it's cash that we're going to let people spend and do their, what is going to, make their lives better off. And that's why you've often had, real libertarians supporting it. And then I just thought I would end with, I thought a very funny example, which is, of course, she has UBI in her household. Her kids get an unconditional allowance. And we were laughing because, I worked for the Obama administration, but we got work requirements in my household. So my kids don't get their allowance unless they tick off a list of chores. I can see the merits of both systems. And I think if a lot of parents probably do that UBI allowance system, and it probably didn't ruin their kids.
Well, let's pivot to a conversation that I think many libertarians will be very interested in. At the 2005 Labour Party conference, way back in 2005, British Prime Minister Tony Blair spoke about globalization, and this is a now famous quote. He said, "I hear people say that we have to stop and debate globalization. Well, you might as well debate whether autumn should follow summer." And he was certainly right that globalization seems to have expanded unabated, but it has also produced enormous backlash against precisely the kind of complacency that Blair expressed that evening. And I'd like to ask each of you, and starting, we can go back to Betsy. how does a government best manage these issues without trying to reverse what seems to be an inescapable world trend that produces as many benefits as it seems to be producing drawbacks?
I think we just need to be thinking really hard about who the winners and losers are, and we need to make sure that the losers aren't losers. I mean, it's really as simple as that. And often it gets swept aside, or like the people aren't sure what should be done. But transitions are really hard. Economists often look at issues. Whenever we have either technological change or we have increased trade, which allows us to take better advantage of comparative advantage and therefore produce more. Economists are so focused on the size of the pie getting bigger, they're not paying enough attention to who's getting slices. And if you want to continue to be able to see the pie get bigger, whether it's through technological change or trade, we got to pay a lot of attention to who's getting the slices and how big their slices are.
Steve, I think this raises a fundamental question. What realistically can a President Biden or really any policymaker do about inequality given the structural forces that produce it today? You have written about this in your books.
So, well, technology and globalization are two of the main drivers of inequality, and to some degree, they involve policy choices that we made very consciously to increase the size of the pie, as Betsy says, and we need to worry a little more about now the distribution of the pie and having the winners to some degree compensate the losers. So it's been sort of among economists and free traders the idea that we should bring tariffs to zero. So here's an idea that Biden could do. He could go to the rest of the industrial countries of the world and all the countries of the world that belong to the World Trade Organization and say, hey, look, why don't we allow all countries to impose a 1, 2, I don't know, maybe 3% tariff on all imports if you segregate the revenue from that to a fund which is designed to retrain and compensate displaced workers. Every country could do this, so it's not a protectionist sort of thing, but it is making very conscious and explicit this idea that the winners, that is the people who are the winners who are getting cheap goods, should take some of their discounts that they're now earning and put it into a fund to help the losers. I think we could also we now know that there's a geographic component to the trade impact. There are certain communities and places that have been much harder hit. You've written a book about this, Justin, and we should acknowledge that. And those places need public investment. They need smart public investment. Many of them are cities. And those cities have an infrastructure that is now underutilized. And we have a situation where we have too many people wanting to live in San Francisco and New York and Los Angeles, and housing costs are going up, and they can't really expand their infrastructure in any efficient way. And we have cities like St. Louis that have been hollowed out that have basic infrastructure that's underutilized. And we ought to be reinvesting in the St. Louis's and the Clevelands and the Detroits of the world. And this is federal investment. And it's not welfare. This is old-fashioned, not just infrastructure investment and investment in research and development, and where we put our federal facilities and research labs in helping investing in companies that are growing companies, enterprise zones, which actually is a good thing that I think the Trump administration did in its tax bill. We can make more creative use of that, I think, to help smooth out the difference between the winners and losers from both technology and globalization.
And it's possible that these kinds of projects, I imagine, could even build some of the national unity that we all know that we need right now in this polarizing moment. And of course, that was a subject of our Power Lunch 2 weeks ago. For our viewers, if you're ever interested in looking at previous Power Lunch recordings, in case you've missed them, you can always go to the Power Lunch website to check out previous broadcasts and see the one on national unity. It was an excellent panel just 2 weeks ago, right in the aftermath of the 2020 election. Returning to you, Annie, beyond universal basic income, what do you think are some steps that we can take to address inequality and amidst globalization?
Yeah, I mean, it's amenable to policy, right? There are all sorts of ideas that I think that are floating out there. So, as Steve notes, there's been for a long time a proposal to sort of take federal agencies and move them out into the country, something like that. Investing in sort of land grant universities and higher education in these places. I think that the country has moved to a place that it's more amenable to doing industrial policy. So you can imagine that helping. And I do think that there's been an interesting way in which Donald Trump has shifted elite opinion in some unusual ways. The Trump administration had the effect of making white liberals less racist. The Trump administration had the effect of making elites in Washington a lot less concerned with deficits and debts and really shifting their thinking on that in a kind of remarkable way. I think Donald Trump broke some of the Republican interest in reforming Social Security and Medicare. And I also think that on this, Donald Trump really did increase interest in this idea that the losers from trade need to be taken seriously, and there needs to be better policies, whether that's trade adjustment assistance or any of the other 1,000 things that we're talking about here, to help these communities. And so in some ways, I think that Donald Trump will have a completely inadvertent progressive legacy on some of these kind of facets of policymaking.
Annie, back in August, you wrote in The Atlantic about the underemployment crisis that was existing in America even before the pandemic. Workers, especially younger workers, were often overqualified or overeducated for the jobs that they ended up taking. What does it take to solve this, and what is the effect that the pandemic has had on this particular issue?
Yeah, it's a tough issue. And so I think that this is a place where labor standards and things like higher minimum wages can help. I also think that just as a general point, letting the economy run hotter, getting closer to full employment and letting the economy stay there can be pretty powerful. That was actually something that we saw in the expansion that the COVID recession ended, was when we were at or close to full employment in a lot of places, we started to see jobs get better. We started to see people come off of the sidelines and get work who might have had a harder time before. And so I think that that's certainly one really good way to do that. And I think that you've actually seen, interestingly, comments coming from people high up in the Federal Reserve talking about that. So not too long ago, I interviewed Mary Daly, who's the head of the SF Fed, who's basically saying that, we really need to take the lessons of 2018 and 2019 seriously and think about getting back to full employment as a way of promoting racial injustice and helping all of these places sort of come back online in a way. So I think that that's one way to think about it too.
Very interesting. And Betsy, you also have written about income inequality, but I want to focus on the piece that you wrote about the intersection of income inequality and happiness, that one could achieve overall happiness or higher overall happiness using income redistribution. What can policymakers do there?
Well, it's funny because there is a myth that people tend to have that more income doesn't make you happier. If that was true, then we wouldn't actually have to worry about income inequality because people wouldn't really care that they didn't have any income. It turns out that when you get more money, it makes you happier. But here's the trick, is that we have what economists call diminishing marginal utility, what we can, put in normal language. You just get less and less of a bang for your buck, the more bucks you have. And what that means is that it's not painless, completely painless to take money from higher income people and redistribute it to lower income people or middle income people. But the pain you're putting on higher income people is much, much smaller than the equivalent boost you're giving lower income people when you do that redistribution. So a social planner, a policymaker, a government could choose to redistribute income and increase the overall happiness of the population. Now, the counter argument is, what if people get so upset that they're having money taken from them that they just, sit down in the sandbox and refuse to do any play anymore? And that's when economists are like, that we'll shrink the pie if we redistribute because people won't have the incentives to get up and go to work. And I think there's a whole literature that shows that that's a little bit overblown. When people face higher marginal tax rates, we still see high income people working 40, 50, 60 hours a week. We didn't see a big surge in activity and work hours, among people who got tax cuts under Trump. People are just not that responsive. So, I think you can do income redistribution and make average happiness in the population higher. And that, it requires acknowledging that there is a happiness cost to the high income people when you're taking the money. It's just, think about what the cost is when you take money from somebody who has a lot of money, and you prevent them from maybe taking that extra day of vacation at some fancy resort, and you give it to somebody who's able to buy, medication for their kids. So you can see why the gain in happiness is a lot greater than the loss in happiness. So there's a lot of room for redistribution if what you care about is overall aggregate welfare in your society.
Well, we've been talking a lot about the folks at the lowest ends and at the raw end of the economic crisis produced by COVID-19. But obviously, a lot of the political impasse here is driven by some of the resistance to changes in tax policy and redistribution by those at the top of the income ladder. Steve, to what degree do you think we should and we will use increases in taxes to provide new services and redistribute in some of the ways that we've been talking about today?
We'll do some more of that. First of all, I would say that you would be actually surprised the degree to which people who are richer actually accept the idea that they could have higher taxes and would be willing to pay it. There's not, I think there's two things that they have in their mind. Number one, there's a limit to that. If you raise tax rates from 35% to 40 or from 37% to 42 or 43, you can raise a lot of money, and I don't think they're not going to change the behavior, and they're not going to push back that much. If you raise it from 40% to 70%, okay, now then you will get pushback. A lot of the pushback on higher taxes is ideological, and it comes from in many cases people who are not that rich and would not be subject to these higher tax rates. The Freedom Caucus and the people who support the Freedom Caucus in the House, this is not all rich people. There are some rich people there, and there are a couple of billionaires who support that political movement. But it's not actually true. I mean, a lot of money in this country is earned by people on Wall Street, and they're disproportionately Democratic, and they support candidates who are for higher taxes. So I don't think the political economy on this is exactly that way. People do care, however, how the money is used. And if you say, would you be willing to have some more higher taxes so that you can support universal pre-K? Yes, check mark. Everyone says yes. Do you want to have daycare for poor working mothers? Yes, we want that. Some of the other uses that are made, however, of government funding, they might not. So it depends on how it's used. As a general rule, Americans prefer to not have explicit redistribution. Take money from me and give it in cash to that person. They would rather it be in services. And as I've argued and many others, also Americans prefer pre-distribution to redistribution. What does that mean? We would rather sort of jigger with the rules of the private economy so that the private economy gives more equalized incomes than to have government do it explicitly after the fact through taxes and transfers. So raising the minimum wage is a way to do redistribution, where the government has a regulation, but it doesn't actually take money from someone and give it to someone else or use it for services to someone else. And the earned income tax credit is a form of redistribution, but it's fairly hidden. So the more that we can hide, that we can make unionization easier to do, which is a form of redistributing money. We tend to be more comfortable with that as Americans than explicit redistribution.
Thanks, Stephen. And one of the ways, of course, that several of these problems could be solved is with a lot of economic growth, and either from the creation of new businesses or innovation. And what's interesting is in the October 10th issue of The Economist, they pointed to new Department of Commerce data showing a once-in-a-generation boom of startups here in the United States. Betsy, are these the green shoots of a recovery? What is the state of small businesses in the United States today?
Well, I mean, the business fundamentals have not changed in many industries. And I think, but there have been some important changes that would spur development. So I don't know where all those startups are coming from, but I do think that there's a little bit of a shift in how we're going to do things. And that is, there's going to be creativity in response to how people help make our lives a little bit easier. If we're going to be working from home more, that's going to change the types of things we buy, the types of services we want. If we're going to be doing more things online, that's going to change also the types of services and businesses we want. Both Stephen and Annie talked about location. COVID has changed our geographical preferences. And that may actually stick for a lot of people, where there are companies that are going to be a lot more reluctant to force everybody back into a traditional Monday through Friday in the office type experience. So I think there's a lot of incentives out there for new businesses to get started. I think they've got some bumpy waters to ride through over the next few months. But on the other side of a vaccine, things could be really great for them. And I also think that a lot of companies are hoping that they're going to get support if they need it from the government. So, yes, I guess I would say those are green shoots. And, I think it comes back to the question you had asked Stephen Pearlstein a few questions ago, where you said, Americans get uneasy when they think that you're talking about socialism, because we really love our new businesses and our startups and our creative ideas, and the idea that if I just think of something really cool, then I can start my own business and it can take off. I mean, I think that's really baked in to the American experience. And whenever we talk about redistribution or solving for inequality, we're going to have to make sure that we're keeping in the back of our mind that what makes America great is that people love that competitive, entrepreneurial environment. We are one of the fastest countries in the world to start a new business, and we really want to keep it that way.
Yeah, and some of these new businesses could emerge in some of these more rural regions or suburban regions where some of the urban professionals are moving that you mentioned, Betsy. And way back in 2014, Annie, you wrote in the New York Times, I'm digging deep into your profile here, about how federal interventions have often failed to actually alleviate rural poverty. And you talk then about the idea of focusing on human capital for rural residents and possibly even encouraging people to move away from such areas. But how has COVID maybe made you change your mind here? Is there a reckoning about how we understand movement in the American economy and maybe the opportunities that could grow?
Yeah, it's a really complicated, interesting issue. And there, is this kind of uncomfortable economic truth that when you move people workers to high productivity places where there's a lot of congregation of ideas, that they become higher productivity workers, right? But it's this tremendous third rail in American politics. You can never politically, it is like an impossible thing to say here, that it would be better if we took people from low productivity places and encouraged them to move into high productivity places in cities. And in many cases, they're prevented from doing that because it's become just so unbelievably expensive to live in a place like Boston or New York or San Francisco or DC, like name your city. And a lot of that has to do with housing policy and the fact that we have dramatic housing shortages in these places. So people will have to pay just enormous sums that really tax even high income people in those places. But, you know, one thing that I've always found really interesting is in a lot of the lower income countries where I have reported, there's actually an active government effort to get people to move from rural places to urban places because the political environment is so different and the economics are so different of that. So yeah, you know, I have no idea how this is going to shake out. I have no idea if people are really going to be able to move to smaller cities, to suburbs in a more permanent way. I remember after 9/11, there was this whole question about whether New York would change and people wouldn't want to be there, and that it wouldn't be seen as safe to live there, and companies with their kind of natural risk aversion would leave. And that didn't turn out to be true, but I remember there's just this tremendous discourse about that 20 years ago after this really deeply traumatic event. And I actually just have a giant question mark over whether these changes in terms of telecommuting and having an office that only meets, you know, once a month or something, how that changes. I definitely, at least personally, right, like I really miss my colleagues. I really miss going into my office. I would love to work in a house that didn't have a toddler in it at some point. But, you know, I really don't know. And I also don't know, in the event that that change does happen, what regions benefit, because it might not be rural areas, right? It might be suburbs. It might be cities that are kind of expensive, but not as expensive as like a New York. So like a Nashville, for instance, or Des Moines, which have all of the amenities of big cities, but also are still much lower cost and still have that kind of agglomeration.
Absolutely. Those may grow in appeal now. All right. Well, let me remind our viewers that that next week we are taking a week off to have a healthy, safe, and responsible Thanksgiving. But after that, we'll return on December 4th for our next edition of the Power Lunch, and we have a fantastic panel joining us. We'll be joined by the New York Times immigration beat writer Caitlin Dickerson. We'll also be joined by former Senator Jeff Flake, Republican of Arizona, whose seat was actually just contested this most recent 2020 election. And we'll also be joined by the president of the Lutheran Immigration and Refugee Services, Krishanti Vignarajah, who is Michelle Obama's policy director and a former candidate for governor of Maryland. It's going to be a fantastic panel. Don't miss it, 12 o'clock on Friday, December 4th. All right, right now we're going to take a brief break for a message from the Schar School, and we'll come back to hear some of your questions.
A world in motion. Our next generation of leaders needs new tools, sharper skills, leadership vision, and policy acumen to succeed in today's environment. A hands-on interdisciplinary education that offers a national and global perspective on the complexities of governance. The Schar School, a vision of excellence that melds theory with practice in the spirit of advancing the public good.
Welcome back to the Schar School Power Lunch. Let's bring up our panelists again, and let's see what our first question is. This is from Cody Bowles. Thanks, Cody. The question is, do you think there is a role to expand tax credits to mitigate some of the negative economic impacts of the coronavirus pandemic? For example, there's a lot of data that the earned income tax credit is greatly beneficial to single working mothers. Would, for example, expanding that tax credit at the federal level or making state level tax credits refundable be an option to help disproportionately harmed groups? Betsy, do you want to maybe start with this one?
Sure. So, I'm a big fan of the EITC. I do think that it works. I think one of the easiest expansions would be to expand it to non-custodial parents or non-parents, because that's a really, really minuscule program. I think that there's definitely room to expand that program, both in terms of the amount that's available and as was mentioned, and who it goes to. This comes back to what Stephen Pearlstein had said. People want to see that sort of pre-distribution. This is really a way to ensure that families who are working are getting a living wage. And it's going to be important to raise the thresholds for the earned income tax credit as we raise the minimum wage, or we're going to see that fall off as an ineffective policy.
Right.
Professor Pearlstein, did you want to come in?
No, you have to do both the EITC and the minimum wage together, and it's not only for so that one doesn't overwhelm the other, but basically the taxpayer pays for the EITC, whereas to a large degree consumers pay for a higher minimum wage, and consumers and employers, and you want to balance the sort of who's paying to raise the wages above market level of low skilled workers. So you want to raise those things together. I would just say about that, using tax credits. This is an old-fashioned tax reformer response to that, which is be careful what you wish for. As a general rule, mucking up the tax code with all sorts of little incentives is probably a bad idea. That you wind up with a tax code that is very distortive and unfair and hard to administer.
Totally unlike the tax code we have right now.
Yeah.
Yeah. I'd also note that, in terms of helping moms, lower income moms who, as Betsy noted, have had a miserable go of it in this recession, you don't get the EITC if you don't have earned income. And you might not have earned income if you've dropped out of the labor force to take care of your kids in Zoom school. And so it's just, it actually gets to Steve's point too. If what you're trying to do is, help low-income moms who might not be able to work, you want to be careful to make sure, even as I think expanding the EITC, making it fully refundable, doing some of the CTC work, child tax credit work that has bipartisan support, which is really important. You kind of also want to think about, who are you targeting and who are you trying to get to, and what are we doing to make sure that those moms who've dropped out of the labor force can come back in, which is going to require some kind of like education component and probably also some income support component. And expanding the EITC is great policy. And Kamala Harris has a really good EITC bill, the LIFT Act, that would make the payments monthly and make it much bigger. Perhaps some support for EITC changes in the White House now.
Well, and let me just add that the child tax credit is really, I think, as Annie said, I think that's where the ball game should be played right now, because that goes, if you're worried about moms, and it has been disproportionately moms of color who have dropped out of the labor force, been forced out of the labor force, faced high unemployment. If you want to help those lower income, middle, and even middle income moms, we need to bolster the child tax credit, and then we need to make it fully refundable. It really needs to be fully refundable.
All right, let's turn to our next question. This one's from Teddy Rockless, who is actually one of my students. Teddy, he asks, assuming Republicans in Congress stonewall the Biden administration in the upcoming year, do you foresee Democrats taking the blame in 2022 for not doing enough? Steve, that's a question I think for you, and then maybe we'll turn to Annie next.
No, that sort of blaming, in Congress, they spend a lot of time maneuvering and playing games with each other so that they avoid voting on things that they don't want to vote on and blaming the other side for it. And I'm not aware of any congressional election that's ever been won on the basis of that these sort of petty games that they play about blaming or not blaming. I will say this, all incumbent, if this Congress leaves town on December 31st without extending the unemployment benefit that was under the CARES Act, they'll all get blamed. Republicans and Democrats, all incumbents. I would love to run against an incumbent that didn't take care of that by the time Christmas and New Year's ran around. That would be a wonderful ad. You could go to town on that one. So they all ought to get in gear, because they all have a negative. They all have a risk of not taking care of this. But as to who gets credit for it, I don't think that that you're going to be able to score many points on getting credit. But you'll get nicked if you don't take care of some of these things.
Of course, it's going to be 22 months before the next congressional elections take place, unless, of course, there's a by-election. And political memories these days seem very short, with when news cycles last about 5 hours. Annie, what do you get from the field? It seems like people just want to see action, period, full stop. Do you agree with Steve here that maybe even after 22 months, people will remember this and hold the grudge?
I don't know. I think it's really hard to know what the economy is going to look like and what Congress will have gotten done over that period of time. I will say that the remarkable stonewalling effort helmed by Mitch McConnell, who remains majority leader and probably will be majority leader in the next Congress, has changed Democratic opinions about structural changes in Congress. So, you now have President Obama and a lot of really moderate Democrats come out and say that they might support ending the filibuster and that they don't want to. Joe Biden is kind of a rare politician that loves it, but they've been driven to that place where if you cannot get anything done, even if you are winning large majorities, because of the structures that Congress has in place, that those structures need to change. And I think that is a really big difference from 10 years ago, and I'm not sure how that is going to play out. I also don't know that I think that Republicans will necessarily take the same stonewalling tack. I think that there are some moderate Republican senators, so Mitt Romney, for instance, or Lisa Murkowski, who there's some question whether she'll even caucus with the Republicans at all, who could be brought over to vote for Democratic priorities that they've already signaled that they support. So the child tax credit expansion, Mike Lee, Marco Rubio, and Mitt Romney love that policy. They pushed really hard to get it into the tax bill and didn't get it in the last time. Could they be drawn over in this hyper-partisan environment? I don't know. I have no idea. I'm very interested to see.
Justin, could I interject here?
Of course.
There's a tendency to blame Republicans for all the stonewalling, apropos to the very thing that Annie just mentioned, which is the refundability of the child tax credit. The reason that did not pass in the tax bill was because Democrats did not support it, and they did not support it for purely partisan reasons. They liked the bill, they liked the idea, but they didn't want to take a stinky tax bill, as they called it, and make it any better. It was a stinky Republican tax bill and make it any better. They didn't want to put lipstick on the pig, so they voted against something that they inherently actually support. And in terms of this stonewalling on the stimulus package, it is not only Mitch McConnell and the Republicans who are stonewalling, and that's just a factual error. If a $1 trillion stimulus were offered to the Senate Democrats or to Mrs. Pelosi and the House Democrats, they would turn it down. So they're all stonewalling here. They're all playing, for advantage. They're all, think they're doing great brinksmanship and negotiating by saying no, no, no. Well, let's see what happens. But it is not a one-sided problem, and that is just false. To suggest that it's only the Republicans' fault that nothing has been done.
Yeah, it's not an equivalent problem at all, Steve. Democrats end up for a number of Republican proposals, whereas Republicans prevented almost anything from passing during the Obama administration, right? I agree with you that I'm not saying that, Democrats don't do it for leverage, but it feels silly to say that they do it in equivalent fashions. I don't think that that's true at all.
Well, what about the example you just gave of a refundable child credit that was on the table, supported by Republicans, could have passed?
Again, I'm not saying that they don't ever not do it, right? Like, I'm saying that I don't think that it's fair to say that they do it in equivalent manners.
No one said it was equivalent. I'm just pointing out that they all do it. And the reason there was not a stimulus bill already, a new stimulus bill, and the reason there may not be one by the time of Christmas is not only because of Mitch McConnell and Senate Republicans.
And that certainly was one of the allegations of the Trump administration through September and October. Let's turn over to our third question. This is from Lou Venice. Lou asks, if you were to base the stimulus on both federal and state resources, how would you even out the field in relation to wealthy and not so wealthy states? Lou has stumped the panel. Steve, what are you thinking?
You know, all states are wealthy enough to raise their taxes on their wealthiest residents to help people who are hurting, and to maintain public services in the face of declining sales tax revenue and income tax revenue, property transfer tax revenue. I don't think the purpose of stimulus is to even out the difference between rich and poor states. The point of the stimulus is to keep money flowing in the economy, and in the case of helping state and local governments, to raise necessary revenues for vital public services. And every state can raise their own taxes, just as the federal government could also. The federal government is not going to raise its taxes and send money to state and localities. The federal government is going to borrow the money, and then the Federal Reserve is going to borrow, and it's going to buy the bonds that the federal government uses to borrow the money. It looks like it's free money, and that's why everyone says, "Oh, let the federal government do this," because just print the money. Let the Federal Reserve just print the money. There is a limit to that, even though people don't want to believe that. And at some point, there will be a cost to printing all that money in the future.
Annie or Betsy, did you have? Yeah,
I was going to say, I think I have a slightly different take on it, just because let's just agree on the premise that the money eventually has to be, that the money has to be paid at some point. The question is, do we want to raise taxes right now? And then even if we do want to raise taxes right now, do we want it done in, like one concerted way through the federal government, or do we want each state trying to raise taxes without crashing their economy? It makes me nervous to think about in the midst of a time of economic turmoil, to tell states this is a good time that you should be raising your taxes. It's a potential for there to be even more economic turmoil. So I think that's why it's a good idea for it to come from the federal government to support the states. I think when it comes to wealthy versus not wealthy states, look, I think what happened was wealthy states got hit hardest by the virus, and they at the beginning, and they were like, look, we need help. We need you sending money our way. And there were a lot of states that are like, no, we're not sending you any money. And then a lot of anger, because these are states that are typically net givers. So these are states that give more money to the federal government than they ever get back. So they're the ones that tend to transfer to the lower income states. So I saw a lot of anger among state senators and state representatives over, an attitude of, well, we don't need to send money to New York, or we don't need to send money to California, or we're not going to help you with your wildfires. Well, the good news is that COVID is hitting the whole country now. And it's not going to be about which cherry picking, which states need help. All the states are going to need help. And I think that that's actually what's going to build more support for help to, for states to help recover from COVID. We're not going to have states that got hurt and states that didn't get so hurt. I think by February or March of this coming year, all states are going to have felt a lot of pain, and they're all going to be looking to the federal government for help.
And Joe Biden has been very clear that he does not plan to look at the electoral map to determine whether he wants to give states money and help them out, whether they were loyal to him or not, in the way that the Trump administration occasionally suggested. Annie, after the 2016 election, some of these, richer and in some cases bluer urban areas were resentful of redder and more economically disadvantaged regions, sort of mutually resentful of each other. Do you get the similar sense in the last 4 years that kind of remains in terms of who is the burden on whom?
Yeah, I think that the rise of polarization and partisanship has been difficult. The United States also has an unusually large kind of Overton window of policy debate. Some of our other peer countries, the range of policy debate is like sort of narrower. There's often these, comparisons that show that most European parties would actually fit in the Democratic apparatus, and the Republicans would be a somewhat further right party, at least compared to Europe. And granted, those are parliamentary systems and there's a lot of differences there, but I don't think that there's easy answers here. I don't think that we have any idea whether politics is going to moderate and these logjams are going to break, and whether there's this feeling that the kind of fever has been broken. One trend that I found really interesting is that partisan views of things like the economy have become much stronger. So whether you think the economy is good or bad is much more predicted by whether you place yourself on the left or the right. And so I don't know how that will change in the future, but it's obviously influencing politics very heavily right now. And I do wonder whether, one thing about Joe Biden is he is legitimately really well liked on both sides. He's dispositionally so different from Donald Trump in the sense that he really, kind of likes everybody. He's not a guy who stokes partisan wars. And so after 4 years of that, will things feel different? I don't know. It's a question that I have. Whether that message coming from the top, will be so different to how it was in the Trump administration, and whether that will sort of start to cool tempers, especially given that Joe Biden has already started. He's a lion of the Senate. He knows all of these Senate Republicans really, really well. And I know has already started making inroads in the hope of returning to a kind of bipartisan consensus that we haven't really seen in more than a decade.
It's really true. And, one of the ways I think that he has done this is he has avoided some of the more polarizing and divisive political issues that have previously split the country and really shredded any sense of cohesion. And of course, one of them, and perhaps the largest of all, hanging over the country for the last 5 years, has been immigration, which is going to be the subject of our next Power Lunch. We're just going to conclude today's by reminding everyone to please do join us in 2 weeks from today, when we'll be joined by Caitlin Dickerson of the New York Times, former Senator Jeff Flake, Republican of Arizona, and Krishanti O'Mara Vinyaraja, the president of the Lutheran Immigration and Refugee Services. It's going to be a fantastic panel. We're going to be discussing precisely this kind of loss of emphasis over perhaps the hottest topic in America just a few years ago, even maybe just 2 years ago, and how everything has now changed and what that means for that topic going forward. For now, let me just thank our three distinguished panelists here today, Betsy Stevenson, Annie Lowrey, and Steve Pearlstein. You guys were fantastic. Thank you very much for joining us on the Power Lunch. Have a very happy Thanksgiving.